Hello, everybody. Welcome to the LockingYourSuccess.com Trading Performance Podcast with Master Trading Performance Coach John Locke, where it's all about real traders, real problems, and real coaching. This is episode number 42, and today I'd like to share with you a segment of a recent trading performance meeting that we had with our trading performance members about the importance of understanding the role that luck plays in your trading results in order to drastically improve your trading. Listen up and enjoy the segment. Years ago, I asked economist Robert Shiller, who won the Nobel Prize Economics, what do you want to know about investing that we can't know? And his answer was the exact role of luck in successful outcomes. And the author said, I love that response because no one actually thinks luck doesn't play a role in financial success. But since it's so hard to quantify and rude to suggest people's success is owed to it, the default stance is often to simply ignore luck as a factor of success. And that's what so many aspiring traders do. They say, I understand that I'm not going to win every trade. Essentially, that's an admission that luck is going to play at least some part of a role in their results, right? That's what they do at the logical level. But when those results come, they ignore the factor of luck and blame it on the process or credit it to the process, depending on which way the result happened to go. And if they blame it on the process, they change their process based on what? Not whether or not they're following a good process. They change their process based on the random fate of luck. Or perhaps they keep a process and they escalate their capital in that process based on the random fate of luck. Not what I want to base my trading on, or my or not the way I want to risk my money, I should say. So next here would be, everything worth pursuing has less than 100% odds of succeeding. And risk is just what happens when you end up on the unfortunate side of that equation. I say, so here's an example. So say I buy a stock and 5 years later it's gone nowhere. It's possible that I made a bad decision by buying it in the first place. Okay, I bought a stock, it didn't go up. Did I make a good or bad decision? I don't really know, but it's possible that I did. But it's also possible that I made a really good decision that had an 80% chance of making money, and I just happened to end up on the side of the unfortunate 20%. Now the question becomes, how do I know which is which? Did I make a mistake, or did I just experience the reality of risk? When this happens, it is possible to statistically measure whether some decisions were wise. But in the real world, day to day, we simply don't. It's too hard. We prefer simple stories which are easy, but often devilishly misleading. And I've kind of talked about this before. I've touched on this before. We talk about the motivational triad, which is why we do the things we do, and the default behavior of human beings. Default behavior of human beings is seek pleasure, avoid pain, and basically to rest as much as possible. So we're always looking for the easy way out, right? We're always looking for the easy way out. And the easy way with trading is looking at our results, right? My point being, this same scenario is playing out in your trading. It is possible to go back and evaluate your trading. And it's possible to go back and evaluate whether or not you made a good decision or whether or not you made a high probability decision. However, most of us simply aren't going to do that. We look at the result and then we create a story that says, good result means good decision. Bad result means bad decision, which is extremely misleading because, like we said, a lot of our results are highly dependent sometimes on luck. And that's going to trick us into ignoring the role that luck played in lessons from what happened in the trade, which is going to lead to poor decisions. I mean, if you go and you do something completely foolish and you win a trade and you look at the results and say, I won, therefore my process is good, then you've just learned something the wrong way, or you learned something that isn't true, or learned something that's going to be detrimental to your trading. Take the shortcut and you say, well, I lost a trade, therefore I made a bad decision. You're also shortcutting not only your thinking process, but you're shortcutting yourself, because you're doing the right thing, but now you're going to take that right thing and you're going to throw it out the window because you've decided that you did the wrong thing. So you're learning backwards, right? You're taking steps backwards as you're trading. So here it is. Another statement from the author, right? We have brains that prefer easy answers without much appetite for nuance. This again, I mean, it can't be more true, right? We're looking for the easy answers. We're looking for not having to do any work, and we don't want any appetites to nuance. Why? Because nuance means that we're making our own decisions. We're taking a look at the evidence, and we're gathering evidence, and then we're deciding whether or not a particular rule set perhaps is the right thing to do at this particular time. And that creates risk that we may be wrong, risk that our ego may get hurt, risking our pride, so to speak. And that's the other thing. We want to avoid pain. We seek pleasure, we want to avoid pain. We trade because we're seeking pleasure. We're risk averse because we want to avoid pain. And avoiding nuance is a way that, depending on how your thinking is set up unconsciously, but for most people, avoiding nuance or adding nuance or your artistic flair to something that has risk in it is often something that your unconscious mind wants to avoid. So the unfortunate part about this is that trading, being successful at trading and gaining nuance, requires looking past the easy answers for the truth and embracing nuance to truly become successful in trading, which means we have to push past our natural tendencies and embrace the discomfort and uncertainty that is associated with having nuance and searching past the easy answer. And that is what I have for you today. If you have any questions or comments or anything you'd like to see on a future Trading Performance podcast, please comment in the video below and we can get any questions answered for you. Also, I encourage you to come on over to lockinyoursuccess.com. That's LOCKE-in-your-success.com, and check out our Pro membership as well as our Trading Performance membership, where you can learn to skyrocket your trading results regardless of the type of trading you do. Thank you for joining me, and I look forward to seeing you on the next Trading Performance podcast.